This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So, how did you get on? Okay, did you go through there and answer those two questions? Hopefully you did. It's better for you to answer them, get them right, understand why you're right, or get them wrong and understand why you've got them wrong. Okay, other than just sitting there and listening to me monotonously going through and talking through everything. So let's put you out of your misery and have a look at those two examples. The first one there, I think the answer should be B. Okay, do you get that right? Excellent, well done. If you get it wrong, don't worry, let's talk about it and see where you've gone wrong. So it says, always read the requirement first. Okay, whenever you're doing these multiple choice questions, or I should say objective test questions, careful, Christopher. Whenever you're doing these objective test questions, as you know already, you wouldn't be here if you hadn't gone through them all already, is to read the question first. So it says, a steady increase in earnings, okay, so earnings is profit for the year, profit after tax, isn't it? Is least likely to be a financial objective of which of the type of entity. So financial objective, thinking about profitability, isn't it? So an increase in profit is a financial objective first and foremost, isn't it? Okay, the more you increase your profits, the more dividend there is for shareholders, and the likelihood is as well there'll be more capital growth. Okay, provided that you've met that profit target. Okay, if your profit target hasn't been met, maybe the shareholders might react negatively and your price might go down, but that's for later on. So least likely. Okay, so it could be that they're all possible objectives, but which one is the least likely? The one that is not going to be considered maybe as much as other objectives, such as non-financial objectives. Okay, and that's why it's B. Okay, because if you think about a not-for-profit entity, it's still interested, isn't it? Okay, in generating a surplus, because the more surplus it generates, the more it could use it for worthwhile causes. Okay, but that's not its main objective, is it? Okay, it may be an objective somewhere within the business, but for the entity, the not-for-profit entity, the most likely objective for it will be to go through there and provide goods and provide services, isn't it? Okay, to achieve its mission, okay, of improving literacy rates within developing countries, okay, or to improve the sanitation within developing countries. Okay, so I donate to a charity called WaterAid. Okay, and WaterAid, there, one of its aims is to go through there and provide clean, fresh, running water to as many communities around the world as is possible. Okay, I can go downstairs in my house and turn on the tap and there comes water. Okay, but elsewhere in the world, it's not so easy to get that clean, fresh, running water, is it? Okay, so their objective is going to be much more non-financial, isn't it? Okay, and in terms there of meeting its overall aim of providing clean water. Okay, so an increase in earnings would be the least likely financial objective there. A public listed company, if you were looking at A, that's going to be one of the biggest objectives, isn't it? Okay, because it's accountable to the general public, or I should say accountable to the shareholders. So that would be a main financial objective. Similarly, just because it's a private limited company, okay, it still has shareholders. Okay, those shareholders might actually run the business as well, given, depending upon the size of that private company, but they still want to increase their profits. And an unincorporated entity, a sole trader, a partnership, that's what we're thinking there. They would want to go through there and have an increase in earnings. If you ran your own market store, if you ran your own accountancy business, then you would want to be increasing your earnings, wouldn't you? That would be your main focus, wouldn't it? Your main financial objective. Okay, so the answer there is B, a not-for-profit entity, because it has its attentions elsewhere, doesn't it? Okay, more within your non-financial objectives. Example number 2, I think the answer there is C, isn't it? Okay, it says the primary objectives for profit and not-for-profit entities are, well, for profit entities, okay, they're focusing on profit and making the owners richer, aren't they? Okay, so that's looking at your maximization of wealth. Your not-for-profit, your minimizing costs would increase the surplus, wouldn't it? Okay, because you have your same revenues, reduced costs, bigger surplus that you can use to fulfill your cause. However, that's not the primary objective, is it? Okay, it would be an objective. It would be good to do, wouldn't it, to reduce your cost, to give you more of a surplus. But the main primary objective of a not-for-profit entity is providing goods and services, isn't it? Because you provide those goods, you provide those services, essentially, to fulfill your objective. Okay, and I was talking about WaterAid before. You know, UNICEF, Oxfam, whoever it may be. Okay, they want to provide services to help out less privileged people. Okay, there we have it. So that goes through there and finishes just this first bit off with regards to going through and thinking about your stakeholders, their objectives, and the different types of entities that we need to go through and think about, and what their financial and non-financial objectives may be. Okay, we'll go through from now on in the rest of this chapter and begin to look at some of those financial objectives in a little bit more detail.